Okay, good morning, everyone. The guys online, can you just let me know if you can hear me before we start? You can just give me an emoji, a thumbs up in the chat function if you can hear me. Okay, so morning, everyone. So today we're going to work through the exam of last year. There is about 7 questions, if I remember correctly. So there's quite a lot we need to cover. But what I want you guys to do is, if there's anything that you're wondering about, please just stop me so that we discuss it before we move on. So how we're going to do it is we're going to focus on one question, then we will stop for any questions regarding that topic, and then we'll move on to the next question. You will see all the questions in this exam paper basically covered most of the learning units. So for the exam, you need to make sure you understand majority of the work so that you can actually do well or pass the exam. One thing that I can see from the paper, it is quite a long paper, so you guys will have to practice time management for the exam. So what it means is, for example, for question 1, it's 40 marks. So within 40 minutes, you should be done with the question and move on to the next one. So that is something you guys will have to practice at home. So I'm going to upload the suggested solution after the session, so that you guys can then also go practice it. And then I've also uploaded the 2019 one that I've prepared, so that you have an additional set to work through. So the key thing you guys need to work on is exam technique, trying to complete as much of the question as you can in the allocated time. Okay. So the first question we're going to start with is question 1. Now, I've already made some comments on here, so let's just read what was required. So for question 1.1, they've asked you prepare the depreciation and closing transfer entries in the general journal of hybrid dealers, 31 March 2019 and 31 March 2020. Now, remember, your general journal is journals. It's not the general ledger, which is your T account. This is where you do the journal. So you debit the account, one account, and you credit the opposite account, and then the amount should be the same for that entry. And then normally you give a narration at the bottom to explain what it is. Now, because they have not actually specifically indicated that you have to leave out narrations, you will have to include it in your journal. If they tell you no narration is required, then you can leave it out. Okay, so that's question 1. We have to do the depreciation and closing transfer. Now, remember, our closing transfer entries is what we do at year end. It's a year end procedure. It's where we move all our expenses, all our income to our profit and loss account. So that's what it means. Then the following question, question 1.2, let's just quickly see what we have to do there. Is we have to prepare the post-adjustment trial balance for that question. So that means we have to take the pre-adjustment one that they've given us and make the necessary adjustments based on the additional information. Okay, so let's start with question 1. So question 1 says hybrid dealers bought computer equipment for $54,000 on the 1st of July 2018. Okay, and the equipment is depreciated at 20% according to the diminishing balance method. Now remember, diminishing balance method is based on your carrying amount. So that means we take the cost less the accumulated depreciation. Let's quickly type that in there. So that is our cost less accumulated depreciation will give us the carrying value. Okay, and then if we look at when our year end is, it's 31st of March 2019. So we actually bought that asset on the 1st of July. So we bought it during the year, which means we need to apportion the depreciation for the first year, and then the second year would be for the full entire year. Okay, so let's do the calculation. So the guys online, I'm going to share an Excel file. Just let me know if you can see it. Okay, so that is the Excel file that we're going to use to answer question 1. Okay, so for question 1, what we have to do is the journals. So your journal generally has your document number, which is your JV, so your journal voucher number. Then it's the date, so when the journal needs to be processed. And then the details, those are your account names. And the debit and credit is the amounts that need to be debited or credited to that respective account. And the folio numbers is generally your B or your N account. But for your purposes, because we don't necessarily have all that information, the folio numbers for this would be left empty. Okay, so the first journal we would have in year 1 would be for the depreciation. So that's the first entry we have to do. We have to account for the depreciation. So we will debit the depreciation account and we would credit the accumulated depreciation. But we said that we only had that equipment for a certain period of time. Now, if we counted, it was from July, August, September, October, November, December, January, February, March. So we've had it for 9 months. So how we do the calculation is we take the 54,000 times the 20% that they've given us, and we multiply it with 9/12 to give us a value of 8,100. So you can see in the general journal, our debit and our credit entry equal. So that means we have applied the double entry principle. Now, at the end of the year, at the end of March, we then transfer that depreciation amount. So the amount that goes to your statement of profit and loss to our profit and loss account. So that is your closing transfer. So that entry would mean we would debit the profit and loss, so the same side the depreciation is, and then we credit the depreciation with the 8,100. So that is what a closing transfer entry looks like. Okay, you will see we did not change the date because the date is exactly the same as the end of the year when we brought the depreciation in the first time. Then for the 2020 year, now you'll see they ask for both 2019, 2020. Now what happens is a lot of students only do these 2 entries and then forget about the second year. So you do the same entries for the second year. The only difference is going to be how you calculate your depreciation. So because we're using the diminishing balance method, it means we're going to incorporate this 8,100 that we've calculated in year 1 and deduct it from the cost before we apply the 20%. Okay, so then for your second year, we take the 54,000, we deduct the 8,100, and we apply the 20% depreciation rate. Okay, now what that means is because we did not acquire it during the year or dispose of it during the year, we will apply the 20% for the full entire period, which gives us a depreciation amount of 9,180 Rand. And then the next entry is then the year-end entry of the closing transfer, and it will look exactly the same as the 2019 one. The values will just differ. Okay, so you can see a question like this that counts 15 marks. It's not a difficult exercise. It is just applying the rules and the methods. Now, how they would have allocated the marks on a question like this is you would have received a mark for each of these accounts. Okay, and then we generally give you marks for the calculation as well. So it would be half a mark for the 54,000, half a mark for 20%, half a mark for 9/12, and then you generally get a half a mark for the amount you've put in here, and then a method mark if you showed the same amount. Okay. And then for your closing transfer, you would get a mark for the account names and then half a mark for the amount you've used. So one would be an accuracy mark and one would be a method mark. So that means someone that made a mistake will not get all the marks, but someone that actually has done it correctly will get 15%. Okay, so that's why they don't give method marks for everything. But then for your calculation in year 2, if you made a mistake in year 1 by calculating the 8,100, they would give you a method mark. When you do this calculation, to not penalize a student that made a mistake. Okay, so that is the mark allocation. So just to recap, it's 1 mark for each account name, and then it's half a mark for each step in your calculation, and then half a mark for the debit, half a mark for the credit. The one side would be an accuracy mark, and the other side would be a method mark. So let's say you made a mistake, you would be able to get 2 out of the 4 marks. Okay, yeah, 2 out of the 4 marks for the debits and credits if you made a mistake, which means you could get potentially up to about 13 marks based on your calculations. Okay, so that is the first one, the journal entries. Before we move on with depreciation journal entries, do you guys have any questions? Are you guys okay with this explanation so far? The guys online, are you okay? Can I move on? Okay, so I'm just going to share the PDF again with you guys so you can see the question. Okay, so part 2 of the question, they give you a pre-adjustment trial balance. So what you have to see it is a pre-adjustment trial balance. So that means it is the trial balance or the summary of our accounts prior to the adjustments that they will list. Our year end is 30 September. Now, if something has not been updated to 30 September, for example, your accumulated depreciation, they would generally indicate it next to the name, or they would give you additional information to note that fact. Now, in this question, you can see they say ignore VAT. Now, why do they say that? It's so that you don't remove VAT when you go calculate the depreciation for your vehicles, for example. So all you had to do is you had to go through the additional information. Now, I've already made comments here, but we'll just go through it and then I'll show you where each amount should be included. Okay, so the first entry we've got, let me just make this smaller, is they told you that the stock take revealed the following items on hand. Now, what it means is they have done a physical stock take. This is how much stock we have in our business. So our trading stock is only worth 11,000 and our office consumables is 340. Now, office consumables are generally shown as an expense. So what that means is at year end, you need to create a consumable stores on hand, which is a type of inventory account, and then remove that amount from the expense because you are creating an asset account. And then for the trading inventory, we need to go look at what is the balance. Now, if we scroll back to our pre-adjustment trial balance, you'll see the trading inventory is 24,640. Now to get to 11,000, I have to deduct 13,640 to be able to get to a balance of 11,000. Okay, now the journal to do this, we will credit trading inventory by reducing the trading inventory, and then we will debit the cost of sales account. Okay, so we're increasing the cost of sales because it means we would have actually sold it, but we probably haven't accounted for it. So that's why I've added that 13,640 to the cost of sales. So in your exam, what you do is as you go through the transactions, just add the amounts on your piece of paper so that you can keep track of it. But when you do the physical calculation or the post-adjustment trial balance, once you've looked through the information and you've assessed which type of accounts would be affected, then you can go populate all the things that are not affected because you get half a mark for each of those amounts, and then go include the rest of the information with the relevant adjustment. So adjustment would generally be an additional mark, but the other things are half a mark. So in the one of the other tests that you guys wrote, you actually did really badly in a question like this because of the fact that you forgot to include the accounts where there were no adjustments, and each one of them added up to half a mark, which was almost half of the question's marks, which you guys then actually forfeited. So that is just for exam technique, how I would suggest you attempt this. Now to bring in your consumable stores in hand, I've just put the journal there on the left-hand side for you. You would debit your consumable stores in hand. So let's just, this is an asset account. And you would credit the office consumables, which is your expense. Okay, so what we are doing is we are removing it from the expense account and we are moving it into an asset account at year end. Okay, and then this is just the note. What do you have to do with the trading inventory? You take it to the cost of sales. So these notes are just to help you guys with some of the information. Then point 2, they tell you depreciation must be provided for. So what does that mean? They have not actually accounted for depreciation as yet for this year. Vehicles are at 25% per annum according to the straight line method, and no vehicles were bought or sold. So it means there was no change in the vehicles at all. If there were changes, you would have to do 2 separate calculations for the vehicles that were there for the entire year and then the vehicles that were there for a portion of the year. Now our journal would be debit your depreciation, which is your expense account. We would credit our accumulated motor vehicle. Now we're going to use the cost that they've provided in our trial balance to calculate your depreciation. So if we go here, our motor vehicles cost is 225. So if we added here, we would do the 225. They said it's 25% per year. There wasn't any adjustments required. So that would give you a depreciation amount of 56,250. Now what you do then on your trial balance is we create a depreciation account with the 56,250, which is on the debit side of your trial balance, and we would add the 56,250 to our accumulated depreciation vehicles account to reflect the depreciation charge for the year. Then entry 3, this is where we adjust for the accrual concept. Now here you need to be able to distinguish what is accrued expense, what is a prepaid expense, what is income received in advance. Now they did not make it very difficult for you guys, but I know some of you struggle with the concept, so let's quickly go through it. So the first one is your wages and salaries payable. So what it means is we still need to pay it, but it has been accrued. So that would be an accrued expense, okay? So your entry to bring it into your accounting records would be debit the wages and salaries account, which is an expense account, and we would credit the accrued expense, which is a liability. So I'm just going to put your liability as L, and salaries and wages, just going to put an E as an expense account, okay? Just so that you guys know. Then the second one is the telephone was prepaid, 4,300. So they gave you the amount, you didn't have to calculate it. Now prepaid expense is an asset. If we do not get the service, we would then actually get the money back. And then we would credit the telephone expense. So the current expense is showing a bigger amount than it should. So we would decrease their value with 1,300. Then the rent income received in advance is income we've received, but we have not provided the services yet. So we have to debit our rent income, which is an income account. We're reducing the income. And then we credit our income received in advance, which is a liability account, to reflect the amount we potentially have to pay back. And then the last one is accrued interest on fixed deposit. That is income that we've earned, but the bank hasn't physically paid it over. So you debit accrued income, which is an asset, and you credit the interest on fixed deposit, which is an income account. So we're increasing the income and we are showing an asset. Okay, so let's quickly see on your trial balance, how would you adjust for it? Now, if you go to your trial balance, you would note there is actually no account for accrued accrued income, accrued expenses, prepaid expenses. So you have to add them on. So what I've done here is I've indicated what accounts do we add on. So the first one was the consumable stores on hand from transaction number 1, which we would debit. Your accrued expense, we're going to credit with the 6,000. Your prepaid expense, we debit with the 1,300. Your income received in advance, we credit with the 3,500, and your accrued income, we debit with 5,350. Then you have to do the contra accounts on your income side or your nominal account side. So you'll see here, for rent income, we've reduced it with the 3,500, which was for the income received in advance. Your interest income, we've increased with the 5,350, which is for the accrued income. Then our wages and salaries, we've increased with 6,000 for the accrued expense. Our office consumables, we've reduced with the 340 for the consumable stores on hand. And our telephone, we've reduced with the 1,300, which was the prepaid expenses. Okay, so that is where we did those changes. Then the last entry they ask you is to create an allowance for credit losses to an amount of 870. So when they tell you to create an allowance for credit losses to an amount of 870, they want you to provide for a certain amount of credit losses. Now, first thing you have to do is we have to go look at the trial balance. Do we actually have an account like that to assess, is there currently a balance to determine which way it would move? Okay, now if we go back to our trial balance, we will see we only have a debtors control account. We do not have allowance for credit losses, so we would have to create it. Now remember, allowance for credit losses is a negative asset account, so we would have to credit it. So we're going to create a credit account, which is allowance for credit losses to the value of 870. But because we've now created a negative asset account, we still have to take it through the nominal account and we show it as an expense. And that expense name is allowance for credit loss adjustment. Okay, so as soon as it goes through your nominal account, your income or statement, you create an adjustment account on the opposite side for the same value in this scenario, which was the 870. Okay. Now let's go do the last step, which is actually answer the question. So we need to create the post-adjustment trial balance. So guys, I'm just going to share the Excel file with you quickly to show you how we do the last step. Now remember, in the exam, you only get marks if you physically answer the question. So if you have not created the post-adjustment trial balance, you do not get any marks for your calculations. So what I would suggest you do is you literally go draw up the statement as they give it to you. You write the account names in there. Then based on the additional information, you will have an idea as to what accounts would be affected. If you do, for example, you're not sure what will all be affected and you don't want to lose any marks, what you could do is I'm just going to show you under the capital one. You can take the initial balance and just go type it in a bracket or write it in a bracket next to that account name. And then as you go, you can add the additional amount. And then once you've done all the information, then you can go fix your columns, your debits and your credits. Because this way you have actually done the trial balance for me and you are showing your calculation. So I can still give you marks even though you have not finished it. Okay, so what do we have to do? Based on the information, we know that the capital account as well as the drawing accounts, land and motor vehicle accounts did not change. Okay, so those amounts we could have transferred exactly as they were from the question that was given. The accumulated depreciation, however, we did an adjustment of the 56,250. So you take the 65,000 that's on your initial trial balance and you add the 56,000 to get to the updated balance of 121,250. Then financial assets, the bank debtors control accounts did not change, so we could just transfer those amounts as is. Okay, the bank was a negative amount in this scenario. Okay, debtors control was fine. Then our trading inventory, we had an adjustment to get the balance to 11,000. So what you do is you show the 24,640 and you deduct the movement to get to the 11,000 amount there. Then our mortgage loan and creditors control remained unchanged. So we just enter those amounts. But now what we still need to do on the statement of financial position is we need to add all the additional accounts that was not on there. So the first one is your consumable stores for 340. You enter that information in there. Then we've got our accrued expense, your prepaid expense, accrued income, income received in advance, and you show those information as well based on the journals that I've done. So you go into this. So these ones would be 1 mark each for the additional amendments. And then the last account that we did not have was the allowance for credit losses of 870. Now, those you would enter as you go through the adjustments, whereas the other ones you would have just entered as you see there's no adjustments. Then for the nominal income statement section, your sales returns, sales and sales returns remained the same, so that we would just enter. The cost of sales was adjusted based on the movement to the inventory account with the 13,640. Our rent income was adjusted with the rent income received in advance, and interest income was increased with the accrued income amount. Okay, service income, rent expense, credit losses remained the same. That was unchanged. Then salaries and wages, we had to add the 6,000 to reflect the correct salaries and wages based on the prepaid expense. Then cleaning materials remained the same. Our office consumables, we had to reduce it with the 340. We've moved to the consumable stores on hand account. Then interest on mortgage, electricity, rates and services, fuel, advertising, those ones stayed the same. So we just carried the amounts over. And then telephone, we had to reduce with 1,300 because of the prepaid expense. Now the last step that most of you missed in one of the entries. Okay, firstly, we have to add the depreciation amount here at the bottom and the allowance for credit losses adjustment. So those are the two accounts that was not on your trial balance. And then the last step, once you've done all of this, you need to total the debit and the credit side. And they should be the same, meaning you have reflected all the entries on the debit as well as opposite credit side. So we have done the double entry system. If those two amounts do not balance, then it means you've missed something, or you've done it on the incorrect side, or the symbol was incorrect in your calculation. Okay, so this is how you had to answer question 1. Do you guys have any questions on question 1? Guys online, do you have any questions for me?